this dollar bubble and we're looking at gold saying, how many dollars is my gold worth? When actually it's, to your point, and I wouldn't quite say we didn't go off the gold standard. I mean, as a monetary system, we did, but they never really got rid of gold as thoroughly, as they would have liked. They sort of banished it, but the dollar's value comes from the gold bid on the dollar. So if you look at the gold as the money and the dollar as credit, and it's gold bidding on the dollar, not the other way around.
Today, we're honored to be joined by Keith Weiner. He's the founder and CEO of Monetary Metals. This is a company that's doing some very innovative things within the precious metals sector. We're going to talk to Keith about what motivated him to get into the precious metals sector, because he has a very interesting background, and he's going to share with us what his company is doing right now. Keith, welcome to Ron's Basement.
Thanks for having me, Ron.
So what got you into silver and gold, Keith? Tell us, please.
The first part of my career, I was your classic computer nerd in high school, went off to computer science school, felt that I'd absorbed everything there was to get, at least at the undergraduate level, dropped out because I wanted to build a software company like so many of my heroes had done before me. Built a software company called Diamondware. We made a 3D spatial audio technology for voice communications, voice over internet. Sold that company to Nortel Networks, August 19, 2008. Now, that was one of the last decent exits that anybody would have had before the financial crisis. And as a historical footnote, the last transaction that Nortel ever did, as they spiraled into bankruptcy, shortly thereafter. It was a surreal experience. At first, I kind of felt pretty bemused, and then increasingly alarmed as I saw what was going on in markets, that fall of 2008. So I started to obsessively read about markets first and then economics, ultimately to try to understand, okay, what is going on? And nothing really seemed to be trying to get to the root of it until I came across this old Hungarian professor and had some pretty radical ideas. And I thought, well, I don't know if he has the right answers, but at least he's asking the right questions. So, I flew out to Hungary, where he was teaching a course without really intending it, kind of became his student without really intending it, kind of getting sucked into, okay, well, I'll do, the degree program. Now, it's my caveat, this is not an accredited PhD. It's not a credential I could ever get a job with, but the work was real. And, he called the field monetary science. So studying money, and that means gold, really, but irredeemable currency, interest rates, the bond market as a science, and how to look at it that way. My dissertation was accepted in 2012. So, after that, well, and during that time, really, I was thinking about the problem in the world. If it was a normal world, I would have built another software company. I had a great team that had followed me to hell and back. They were saying, Keith, we want to jump off this big company. What's the next venture? What can we do? We were brainstorming all kinds of crazy ideas. But I eventually came to the realization, okay, there's this problem. I want to do something with the problem. Gold clearly, has something to do with the solution. That the idea of monetary metals was really around interest on gold, because interest is the key to circulation. If there's no circulation, you have to increase the interest rate, and that will pull gold into the market. And if you push the interest rate down, you'll push gold out of the market. And so that was that became the business thesis, right? If we pay interest on gold, people will deposit their gold. And that turned out to be true. And the rest is history, as they say.
Yeah. So you identified what you thought were, I guess, some scary situations in the world monetary system back in 2012. Is that accurate to say? Like, you kind of looked at what was going on with the financial system, you grew concerned, and that was kind of the motivation or the impetus to you to kind of start to start this innovative company, which, I guess, for lack of a better way to say it, makes gold and possibly silver more functional. Is that a fair statement?
Yeah, I mean, the realizations were going back to about 2009.
Mm-hmm.
It all kind of culminated, and I incorporated monetary metals in 2012.
Okay.
And yeah, I mean, if you read my article, when gold backwardation becomes permanent. So there'd been this intermittent gold backwardation that was happening, and gold should never be in backwardation, but it was. And that was, I looked at that and said, this is the harbinger of the collapse of fiat. People say, well, how can the dollar collapse? Because, they can always issue more dollars to pay whatever debt, right? I mean, if you borrow in the currency you issue, it should never fail in that sense. And as the world's reserve currency, boy, does the U.S. government get an enormous license to indulge in what has been called exorbitant privilege. But there's a finite limit to it, and most people think, okay, well, they're gonna print themselves to infinity, and that will cause hyperinflation. And the gold backwardation thesis is a different look, I think a more scientific look, because this is what's going to happen. Yes, it's going to fail, but not as a function of quantity. It's a function of the failed quality, as the quality of the assets backing it are, is declining, and exponentially so. And we'll get to a point where the currency will be repudiated, not because there's too many units of it, but because it's not trusted anymore.
Confidence, lack of confidence,
but particularly confidence in the counterparty by the gold owners. The gold owners will pull the gold back and not participate anymore. And everyone who doesn't have gold is not a participant in this. It's only the gold owners that get a vote in this particular election, if you want to call it that. And the gold owners will pull their metal back.
So my brain is firing in so many directions right now, Keith, because I have the hardest time explaining what I think you just explained. I've said this many times on my channel down here in the basement, that like eventually, and I've made this argument, that the world never really went off the gold standard, right? I mean, it's kind of the temporary, you could even say since 1971, kind of these temporary journeys into pure paper. But at the end of the day, is that gold and silver, for that matter, I have a hard time verbalizing it, but I think you did a pretty good job. But it's like they come back to the top, or they rise to the top. They become, eventually people realize that paper money is just paper money, and especially, or in particular, when there's been abuse of the exorbitant privilege. Is that accurate to say at all?
Oh yeah, there is an exorbitant privilege, and oh boy, they've been abusing it. Yes.
Yeah, and eventually gold and silver reemerge as the preferred store of value. I mean, I know I'm simplifying things, but
yeah, it's so if you have gold, there's a variety of things you can do to try to get a return on it, right? I mean, you can sell it, buy a T-bill, make some interest, but at the same time that you do the sell transaction, you buy it forward. So there's various arbitrages between gold and the dollar, and it's when people refuse those arbitrages anymore. So here's another way of looking at all this. I've heard any number of speakers, if you go to all the usual conferences, whether it's the New Orleans Investment Conference, Money Show, Freedom Fest, there's a lot of conferences for gold and silver minded people to talk about investing and alternative investments and gold as a store of value. And there's always, almost inevitably, there's a speaker talking about, at the end of the day, you're going to see the board of all the different instruments, whether it's Apple shares or real estate or gold, and gold is going to go no offer, that the offer will be removed from the board and you can't buy gold anymore. And, looking at this in a scientific way, this is kind of, and I'll use an analogy. Back in the day of Copernicus, they thought that the planet, because they believed everything revolved around Earth. And if everything's revolving around Earth, then you look at some of the other planets and there's this retrograde motion where they go forward a bit and then backwards and then forward some more and then backwards a little bit and forward some more. And it doesn't make any sense, this backwards stuff. When you realize everything's going around the sun, including the Earth, then that simplifies. That's just an artifact of our vantage point. And normally in times of crisis, it's the bid that's withdrawn. Suppose that the U.S. Geological Survey said there's going to be an earthquake in LA, a magnitude 15 on the Richter scale, nothing taller than a dollhouse will be left standing. There would be no lack of offers to sell real estate, and some sellers would be cagey and try to give you a 5% discount. Other people might be desperate and give you a 50% discount. But what you would not find, probably from Santiago, Chile, all the way up to British Columbia and Canada, all along that entire ridge of mountains, what you would not find is a bid. The whole world would be holding its breath, waiting for the earthquake, and after the earthquake, the bid would come back, and obviously, depending on the damage, the bid can be a lot lower. Bid withdraws in times of crisis or stress. But why is it that offer withdraws in gold? Why is gold so uniquely different? And I think the answer to it is, no, it is the bid being withdrawn, but we've actually looked at this inside out. We're in this dollar bubble, and we're looking at gold saying, how many dollars is my gold worth? When actually, it's, to your point, and I wouldn't quite say we didn't go off the gold standard. I mean, as a monetary system, we did, but they never really got rid of gold as thoroughly, as they would have liked. They sort of banished it, but the dollar's value comes from the gold bid on the dollar. So if you look at the gold as the money and the dollar as credit, and it's gold bidding on the dollar, not the other way around, then things become really simple. In that final crisis, in the end, gold withdraws its bid on the dollar. It's a bid withdrawal, which is consistent with everything else in a crisis, not an offer withdrawal. And so at the end of the day, the gold owners stop bidding on the dollar, which precipitates this whole crisis that I described in that article. And the dollar eventually collapses to zero because gold won't bid on it anymore. And if gold won't bid on it anymore, it doesn't actually have any value.
Yeah.
So it's the gold owners that have a vote in all of this. That's kind of the interesting thing.
Yeah.
Not quite a meek will inherit the earth thing, a little bit different, more like those who have the gold it's the golden rule. Those with the gold make the rules.
Yeah. First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects. Well, what about this? What about this idea that and this is a great conversation, so thank you, that gold is universal? I've heard people say, and I agree, and I'd imagine you would as well, that you and I could hop in an airplane right now, fly anywhere in the world, and get off the airplane, and there's a market for gold. There's likely a market for silver everywhere in the world, and that's been the case for thousands of years, right? So is that why they couldn't completely kill it, right? I mean, they couldn't completely squash gold. And when we compare, this hit me the other night, Keith, and you tell me I'm crazy if I'm wrong, but everybody thinks, oh, the dollar is and it is, right, the most powerful, biggest currency in the world, but it's still not as big and powerful or universal necessarily as gold. Gold has still maintained that. And so, then I want to ask you this one question, because this is a crazy thesis that I've developed lately, that as a result of this universal nature, timeless nature, gold is very wise as a market. It can, with age comes wisdom. And on top of that it's also maybe one of the purer markets in the world, because it's impacted by market, like an aggregate of market forces from everywhere on the planet. That gold is, does that make sense?
Yeah, I mean, I think, people try to, plot charts, for technical analysis and predict price.
Yeah.
And I think every asset category, you could sort of rank it on, let's say, on a scale of 1 to 10, of how much its price is affected by charts. Like, in other words, how many people are buying and selling it solely based on the charts.
Mm-hmm.
If you take something like Bitcoin, everybody in the Bitcoin world is watching the charts. Now, some of them say, well, they're going to hodl forever. and you know, a lot of that rhetoric I think is insincere. It's all the bros pumping each other on Twitter, and you know what their real intentions are when they intend to defect or gains. You know, they're not going to say that until after they sell, of course. But the case of gold would be the opposite extreme. There's so many people, there are billions of people in the world that own some gold, and they're faced with a set of circumstances that are so alien to somebody sitting behind a computer screen with, you know, 3 computer monitors. They have social media on one, they have, you know, Bloomberg or CNBC on the middle, and they have all their tickers and charts scrolling in real time on the right. And you know what's going on with most of the people in the world that have gold, either buy it or sell it or, you know, own it, is completely alien to that.
Yeah.
And I'll give you an example, and some of it's fairly sad, but you know, people are in bad circumstances and they use gold to make the best of it. So there's certain societies that are, shall we say, low trust, and particularly for women, they can't really even trust their husband, because the husband has the right legally to say I divorced these 3 times, and then the woman is done and basically out on her ear. And but in some of these societies, the thing that's sacrosanct is she gets allowed to take her possessions, and the law recognizes her clothing and her jewelry as hers. And so when you know, some of these families have a lot of money, and so she gets an allowance, and I've seen them, like in the gold souk in Dubai, they grimly walk into the jewelry store. Like, for a Western woman to walk into a jewelry store is a happy occasion, and they're excited, and you know, trying on pretty things, right? But you know, some of them walk in, it's pretty grim, and they have their allowance, and they just want to buy a piece of jewelry because that's their safety margin against whatever may come in life, because it's a low trust society. I guarantee you, she is not looking at a price ticker. She's not looking at what the hell Jay Powell may have said yesterday in the Federal Open Market Committee. Oh, interest rates are going to go down, therefore that's going to be inflation, therefore that's going to be good for gold, or whatever the thinking may be. You're just thinking, I got to get me another, you know, necklace. And in these jewelry stores, by the way, and if you've only been in the West, it's impossible to imagine. Whenever you see a piece of gold jewelry that looks kind of chunky, it's always either just hollow on the inside or it's like a C shape, you know, like this. These things are solid. I picked up a necklace that looked completely unassuming, 89.5 grams of 24 gold. This thing's 3 ounces. I mean, it had some, you know, and you know, it's monetary in nature. I mean, yeah, okay, it has a design that maybe you consider beautiful, arguably, but it's monetary in nature. Yeah, that's the whole point of it. Yeah. And anyway, so you know.
No, you brought up a great point I've never thought of, right? That you know, I gave my, you know, description of how I thought the gold's universal, timeless, all that great stuff. But another component of that is indeed the fact that, like, all these people in China, in India, right? And I hear that, like, Indian households have 25,000 metric tons of gold. That's the statistic that I've heard. I mean, that's a lot of gold.
I'm sure it's a lot more than that.
Yeah. I mean, that these people aren't, like, trading it, like you said, making buy-sell decisions based on if they think the Fed's going to lower rates in September or, you know, whatever. They're, you know, and then same thing I know with silver in India with the farmers, that they aren't necessarily buying and selling based on that. This is a universal market that's affected by more, I would say, almost different and stronger market forces than any other market maybe in the world. I know the oil market's huge, but I don't know a lot of individuals who are dabbling in, you know, purchasing barrels of oil or anything like that.
Yeah, I mean, if you count the total, so I argue that the total amount of gold that's actually out there in human hands is a lot higher than the official estimates. And so I had somebody from the World Gold Council, John Reed, on my podcast a couple of years ago now. And, you know, you know, our podcast is not a confrontation, make the guest look bad, you know, kind of thing. It's conversation and exploring different ideas. But I kind of pushed him a little bit. It's like, you know, the World Gold Council is the one who works with all the central banks and all the bullion banks and all, you know, banks and everybody and governments to come up with that estimate of how much gold there is. And they estimate it's 206,000 tons, I think, at the time. It's probably up a few thousand tons since then. We'll call it 200,000 tons, which, you know, today's prices is what, $14 trillion or something. I think the actual amount of gold that's out there is a lot higher. We do know, I used to say that people have been accumulating gold for 5,000 years, but last year, I don't know when the find occurred, but I read the article about this find in this cave in Bulgaria, where they found some ancient warrior king who was buried with 7 kilos of obviously ceremonial gold 6,500 years ago. So for at least 6,500 years, man has highly valued and prized gold to the point where they're burying their warrior kings with it. And, you know, gold has always been the kind of thing, not only is it always universal, and I agree with that, but it's also been the kind of thing that people don't talk about. They hide it from their nosy neighbors, you know, who could steal it, and from their governments, and have been doing so far as we know, for 6,500 years.
Yeah.
It's you know, it's Gandalf saying to Frodo in Lord of the Rings, keep it hidden, keep it safe.
Right.
You know, every once in a while, I'm in somebody's office in the gold space. There's always a safe in the corner, and I don't say anything about that safe because it's not my place, and people don't, you know, appreciate nosy questions about stuff like that. But I'm talking about this. I'm talking about the idea that people don't talk about their gold, and even to their own kids. And you know, the old man is on his deathbed, and he says, "Bring my eldest son," and then he says, you know, "There's gold, you know, under the stove," you know, in his dying breath. And this guy just starts to laugh, and he says, "You see that safe over there?" And yeah. And he says, and he looks at me over his bifocals, and he says, "There's a lot of gold in there." I'm going to look at him. He says, "I mean, a lot." Now the safe was, you know, I don't know, 1 meter tall, and you know, 2 feet wide and 2.5 feet deep or something. It was a pretty big safe. If that thing were full, like solid packed of bars, you know, it'd be a couple of tons of gold in there. I'm sure it wasn't much. I don't know what he meant, but you know, some people say a lot and they mean they have 12 whole ounces, and other people say a lot and they mean, you know, 12 kilos, and some other people might mean he has a ton in there. I don't know. But that's how it's always been for thousands of years, and so you can't inventory it. I think it's a multiple of all that. But here's the point of all this. I argue that all of that gold is potential supply at the right price and under the right conditions. And 8 billion people on this planet are potential demand at the right price and under the right conditions. So that, you know, when people say, well, you know, the miners produce 3,000 tons a year of gold and that's the supply. No. All that gold is supply, and it will come to market in the right condition, or could come to market in the right conditions. And that's how you have to look at it. So yeah, this is a massive, massive, massive market. Much, 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 much bigger than most people really appreciate. And for those reasons and others, it's also a very stable market. The gold price is not like Bitcoin banging around like a pinball. It's actually the value of the dollar that's moving up and down, not the value of gold.
Yeah. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I'm going to ask you one more question before we move to talking about your company specifically. What are your thoughts on the digitization of gold? I know the World Gold Council and the LBMA have I think it's called Gold 247 project. I was talking with Rick Rule just a few days ago. He said he thinks possibly in the balance of this decade that we could see like a real movement towards the digitization of gold, being backed by, I guess the plan is the blockchain. Any general thoughts on the it seems like there's things going on right now on many different fronts in that regard, but none of them, I don't sense, in my opinion, have really caught on yet. Any thoughts on that?
Yeah, I mean, it's like, where do I begin?
I know. I'm sorry. A big question. And I want to add, I want to make it even more confusing, not confusing, but the other thing I want to throw in there is, could it lead to a massive increase in demand for gold if it is digitized and is made much more functional? Then I promise no more questions, Keith.
Yeah, so the key is functionality, right? So I've met a lot of CEOs of a lot of, gold, either gold attached to credit cards, gold on the blockchain, gold on an app, digital gold in one form or another, and not broader than just blockchain. And, they're all trying to make it possible for people to pay gold, use gold as a means of payment. And, I say to them, look, a lot of people would be happy to be paid in gold. But most people don't want to pay out gold.
Mm-hmm.
And so the fact that gold is not used in payments isn't for, the root cause isn't the lack of an app that makes it possible to pay gold. Obviously, you could hand gold physically. I mean, it doesn't require, for thousands of years, it never required an app.
Right.
And so, the presence of an app, in a certain sense, is a solution looking for a problem.
Mm-hmm.
And so I think, you have to get the horse before the cart, and not the cart before the horse. It's okay. Under what circumstances would people want to pay out their gold? And I think, getting back to my thesis earlier about interest, and to tie this together, today gold it's kind of a dead end. It's a capital asset. So you make your money in dollars, right? And then you buy some gold, then obviously you go through a bid offer spread. So if you were to sell the gold, buy the gold and then sell it, you lose something. But for most retail people, especially if it's physical gold, you're losing a couple of percentage points of value, unless the gold price moves up. And if you're doing it online, maybe you're only losing 1 percentage point or something. But so gold's a capital asset. Why would you spend your capital asset? It would be like buying a house and then chiseling off corners and bits of it in order to consume it. It doesn't make economic sense. That's not how people want to use it. But if you had a gold income, if gold were the income and not dollars, then of course people spend their income.
Mm-hmm.
And gold is unique and special in a lot of different ways. But if your income was gold, you'd be spending your gold, of course. And that's, again, historically, we know that's how people did it. So I think you have to get the horse before the cart. What's the precondition for people to want to spend gold? And that is they have to have gold as income. In order for people to have gold as income, what's the precondition to that? Their employers have to be financing their businesses in gold. And if they're financing their businesses in gold, right? So look at the world today and what props up the value of the dollar, right? And people just say, well, faith and whatever, and confidence. Yes, sort of, but every debtor and all the producers are in debt up to their eyeballs. Every farmer, every miner, every trucker, every shipper, manufacturer, distributor, they're all in debt. If you have $1 million worth of debt, and let's say the interest rate, and depending on when your debt matures and when you rolled it over, you're probably paying 8% interest today. You need $80,000 a year in profit. You don't service debt with gross revenues. You service debt with net profit. You need $80,000 in profit just to service the debt. So you have to produce whatever it is, good or service you produce more of it and sell more of it, dump it on the market on the bid price in order to raise enough revenues that net of all your expenses, you have at least $80,000. Otherwise, the creditors come and take everything. And so they are hungry for dollar revenues, and anything else revenues isn't good enough unless they can just immediately dump, whether it's euros or whether it be gold or anything else. They've got to just dump that, or Bitcoin for that matter. They've got to dump it and get dollars, because dollars is what they need for debt service. And their employees also have debts: a truck payment, car payment, house payment, student loan payment, which are all dollars. If those businesses refinanced in gold or recapitalized in gold, they'd be seeking gold revenues.
Mm-hmm.
So it's the finance that's going to drive the whole thing.
Okay.
Which is, obviously what monetary metals is all about.
Yeah. Well, tell us about monetary metals in our final few minutes here. I think from what I understand, it's a innovative company, and you're doing some, have some initiatives that are generating a lot of interest out there.
Yeah, I mean, the innovation, in a certain sense, it's very old. It goes back thousands of years. give me your gold and I'll pay you interest on it. So if the interest rate's 3%, give me 100 ounces. At the end of the year, I'll give you back 103 ounces. Pretty simple, thing. People like to sort of get me in a gotcha and say, yeah, they were doing that 2,000 years ago. Yeah, you're right. They were. Yeah. And, that was the origin of the bank, or, which comes from banco, which is a bench where, the money people were counting it out and so on. But, at its core, it's a very simple idea and a very powerful one, which has two propositions because there's two customers. Yeah. There's the business getting the finance, and then there's the saver who's getting a return on the savings. So for the saver, there's a universal human need for savings and getting a return on savings. And unlike all the other wars that governments have waged, they've waged a war on drugs, they've waged a war on poverty, they've waged all these different wars, none of which they've succeeded. But they have waged a war. The government with its central bank in collusion with the commercial banks, they've waged a war on interest. Mm-hmm. And largely they've won. And now, they thought they'd blip up interest rates. Everybody believed it. Already in the rest of the world, the central banks are reversing and they're cutting interest rates again. Now, the only question with the Fed is when they do start the cuts. But the Fed is talking about it. Interest rates are going to slam right back to zero and beyond. And even if there is a little bit of interest in the dollar, it's not necessarily compensating you for the debasement of the dollar that's going on at the same time. So they take away X percent, they give you 2%. It's, you're falling behind. So there's a need for return on savings. So your savings can grow and support your retirement. And, that's what we're doing. So, give us your gold. We're paying anywhere between 2.5% and 5% interest, depending on, the opportunity. And, but, call it 3%. Right. And that's 3% in real money. Mm-hmm. But what we're doing is we're financing real businesses, and we have two programs. We have leasing, and this is for businesses that have a gold inventory or gold work in progress. So this is for jewelry manufacturers, jewelry retailers, mints, refiners, recyclers, high-tech coatings companies, low-tech, electroplating. Anywhere where there's gold, there's always a certain amount of gold, like in the process. Mm-hmm. So what makes a lease is the metal is physically present. We can show up, put it on a scale, and prove that it weighs greater than the lease amount. It is not on the balance sheet of the lessee. It does not belong to them. It's not available to their creditors if they should declare bankruptcy. The title is owned by the investors who own the metal. Yeah. We have another program which is lending, and so we do gold loans to companies that don't have gold inventory but have gold income. And so a mining company would be a great example of that, where they pull metal out of the ground. We have a silver loan that we're doing for a company called Bunker Hill right now. That is a mine that produces lead, zinc, and silver. Okay. It's paying 12% for accredited investors. So this is on balance sheet. There is credit risk, unlike in the leases. The interest rate's obviously a lot higher at 12%. And what we want to do is continue to scale this and find more and more different kinds of businesses that qualify for financing in metal, and begin, the process of remonetizing metal in a big way. But the metal has to have a return in order to really work as a monetary system. That's been the Warren Buffett objection, right? Well, gold is great, whatever, but it doesn't produce anything. You can't get a return on it. Yeah. Okay, well, with all due respect, Mr. Buffett, now you can.
Yeah. Well, and that's what I think is innovative about what you're doing, at least in modern times. But like you said, it's been done throughout history. So if I give you 100 ounces of gold, you'll, on a simplistic terms, at the end of the year, I may earn 3 ounces of gold as my return on my investment, I guess you would say, that I gave you. But you would take that gold and then lease it out, or in some way get it out there into the business community, and they would pay probably a little more than 3 ounces of right. Yeah, right. I mean, you're not doing this on a charitable basis, I imagine.
Fortuna Silver Mines is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle and provides a foundation from which to harvest great profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals.
But it's very, yeah, I mean, it makes gold functional again. So thank you for explaining that to myself and to our viewer who's watching us. And there's no reason why that shouldn't work, right? And like you said, you know, it proves Warren Buffett wrong in terms of what he's always running around telling us, that it's, you know, you just buy it and it sits there and you can't make any income on it, which is not necessarily true.
It does something else also, which is, you know, I've given a lot of, you know, talks, economics, you know, type talks globally for a lot of years now. And, you know, you can explain to somebody, look, it's not how many dollars your gold is worth, or for that matter, the rest of your portfolio, it's how many ounces of gold your whole portfolio is worth. Yeah. So if you're working hard and taking risk and having headaches, and then you end up being worth less gold at the end of the year than you started, you know, your wealth has gone down. I can say that until I turn blue in the face.
Right.
People can entertain that as an intellectual exercise to a certain degree, but it doesn't necessarily stick.
Yeah.
But if somebody gives Monetary Metals X number of ounces of gold, and they get an account statement that says, okay, you have this many ounces, but then next month it says that you have this many ounces and it's a little bit more.
Mm-hmm.
The month after that, it's a little bit more. Then suddenly, ding, the light bulb goes off, and they get it at a more visceral level. It's not an intellectual, academic, you know, arcane theory kind of exercise. It's like, oh, I'm getting more gold. They're paying me gold. You know, this is more like savings.
Yes. I get exactly what you're saying, because I'll sit down here in the basement and talk to my viewers and say, don't think of your silver in terms of dollars. Think of it in terms of ounces, right? And then 5 minutes later, I'll be saying, well, the price of silver is $28 or $29. And, you know, it's like, I grew up in the United States. I think in terms of dollars, but really, it from an intellectual perspective, but also like the real truth, right? It's like even me, a guy that lives gold and silver, like I'm asleep to a certain extent. I still think of, you know, when we get done here, I'm going to check what the gold price is in dollars. You know, I'm thinking of it in dollars, when really what we need to think of it in is ounces. And that's, boy, you gave me a great visual. Like if I had an account with your company and, you know, I get my monthly or quarterly statement and I can see that my number of ounces are going up. That's, you know, like you said, ding, ding, the light bulb goes on.
Something everybody can do. I don't know how many people actually do it, but I talk about this all the time. You know, everybody must keep track of their net worth on some spreadsheet somewhere, right? Yeah. So at the bottom of, you know, call it A172 is, you know, the bottom line that says, okay, this is my net worth in dollars.
Yeah.
Put right underneath it the gold price as of that moment, and then divide the dollar net worth by the gold price of that moment, and that will give you your net worth in ounces.
Mm-hmm.
And every quarter, I mean, don't do this every day because it just gets ridiculous.
Right.
Every quarter, look at your net worth in gold to see if it's going up or down.
Mm-hmm.
Everybody should be doing this. I mean, whether you have, obviously I want them all to open accounts at Monetary Metals, but regardless of whether you do that or not, that's easy to just do this on your own spreadsheet. And then you see whether you're going up or down. And if you're not going up, then you're not really gaining wealth. You're taking the risks are real.
Yeah.
You give your money to some investment, you may not get it back.
Mm-hmm.
But if the value of that comes back and it's actually worth less gold than when you started, you've actually lost wealth for all that risk.
Yeah.
And that's a very sobering, you know, when people start looking at things through that lens, I think that's an important insight.
Yeah, and if someone had done that exercise, let's say back in October of 2023, and compared, because the gold price has gone up so significantly, their net worth measured in gold ounces compared to today, they unfortunately would have seen a decrease, right, in their net worth measured in gold ounces.
That's right. And that's, that should be a red flag. Like, hey,
Yeah.
what am I doing here?
Yeah.
And, because I think at the end of the day, gold is an economic constant, or the closest thing we have to an economic constant. So if you measure things in gold, it's an accurate barometer of what you've got.
Yeah.
And, and I was going to say, but unfortunately, and you say, you'll go back to say, well, silver went down yesterday, right? Obviously 5% or something at one point. Actually, it recovered a bit. The whole of our education system, the whole of our financial regulation, everything is designed to train, and it's sort of brainwashing to train everybody to think in dollars and wants the dollar value of something. So if I say to you, I have $100,000 worth of gold, you have no problem visualizing it. Everybody watching this, okay, yeah, I get that, right? If I said I have 100 ounces of gold worth of dollars, well, now wait a minute, I've got to puzzle that out. What does that mean?
Right.
If you go to Google Images and you type in money, I want to see pictures of money, you'll see page after page after page after page of various different ways of paper with green ink on it, whether it's somebody grabbing a fistful of cash, whether it's the printing presses that's rolling off, whether it's stacks or pallets of dollar bills or cartoon characters or whatever. You're not going to see a gold coin anywhere on that search.
Yeah.
And boy, have they brainwashed us, at least in the US. Other places in the world, not so. They have a much clearer picture of what they mean by money. But in the US, or the West, really, it's brainwashing is complete.
I agree with you 100%. And one thing I've learned is the last thing you want to do is to try to convince your friends or family that they've been brainwashed, because they don't like that. I figure, and what I tell people is, because the people that watch my channel know that most people are brainwashed. I mean, 99%. And even I'll admit, I am still, like the example I gave earlier, to a small extent, struggle with it. But let them come to, they'll find out eventually. I say, let them come to you. So Keith, thank you. You really are one of the smartest guys in the room. That's what people told me about you. And this has been a great conversation. If people want to learn more about monetary metals, I'll put a link to the company's website in the description below. Is there anything that I forgot to ask you, or any other information that you need to share with my audience?
If they want to follow me on Twitter, I'm at Real Keith Weiner. Okay.
The Real Keith Weiner, right?
Well, no, but just at Real Keith Weiner.
Okay. Got it. All right. Well, thank you. I'm gonna bug you in a few months and have you back in the basement. This has been a very stimulating conversation for me. You kind of turned on a few new light bulbs in my head, and there's very few up there that are left. So I appreciate your time and your interest.
Thanks for having me, Ron.